Hey, what's going on, everybody? What's up, traders? What's up, tycoons? Coming at y'all with an update on UNG. We're going to take a look at the United States Natural Gas Fund. I actually started covering these because we had a viewer request, and they've actually done pretty good, getting a decent amount of views and, new subscribers. So I will keep updating on UNG on a frequent basis, probably at least once a week. So if you enjoy these videos and you enjoy this technical analysis, make sure to subscribe so you don't miss any of the updates. And also, don't forget, I do those viewer requests. If you want to see your stock, your bond, your cryptocurrency, anything, I really track all of those. All you have to do is comment down below. I'll make a video on it for you as soon as I can. So let's jump straight into it. All right. What we're looking at is a giant falling wedge. This is a bullish pattern, but we are at the bottom of this trend line here. So it's going to be really interesting to see, do we end up breaking this trend line and heading down to some of our major support levels, or are we going to get a bounce, right? Now, things that make new 52-week lows often make new 52-week lows later in the future, right? And we went ahead and discussed that over here when we were at our major support level of 1167. We've now dropped below there and we're starting to recover, but we're still battling that 1167 as a major resistance level. But there's a couple things that I'm looking at that could indicate we're about to get some type of a rally. Now, will it be a reversal and will it be enough to actually break us out of this pattern? We're not sure. We're going to go over the necessary steps for that to happen and why we're going to be tracking that there could be some type of a bounce coming soon. So what we want to do is we want to actually pay attention to our MACD. All right, that's going to be right here, and our relative strength index. The RSI is going to measure, obviously, the relative strength of a stock at its given price. So if you see the price of a stock going up, the relative strength should go up as well. If you see the price of a stock going down, you should see the relative strength going down as well. Sometimes that doesn't happen. On the MACD, you can use this for entry and exit signals based off of this blue line right here. So what we're going to do is we're looking at a current bullish divergence, right? So what we have is a low right here and a lower low. So the stock is clearly in a downtrend, but on our relative strength index, we have a low and then a higher low, right? So we're actually holding this bullish divergence trend line very well that we've indicated and that I pointed out in the first UNG video. I said, hey, as soon as we break this bullish divergence trend line, we're most likely going to come down to our next support level, which is at 1031. But we've done a good job of holding it, and it's going to be interesting to see, can we continue to hold it? Now let's take a look at an example in the past. Okay, if we if we come over here real quick, let me get this out of the way. What we're going to have is actually a bearish divergence in this moment and then a MACD crossover. Okay, so that's the two things that we're looking for on the current price action. But here we have a high and then we have a higher high. So clearly we're in an uptrend, we're heading higher. The relative strength index should mirror that, but instead we have a high and then a lower high at the exact same points. This is known as a bearish divergence and indicates you could see some bearish activity in the future, right? And then sure enough, what do? We see the MACD get above, and then it crosses below this orange line right here. So the blue line crosses below the orange line. We have a bearish divergence, and look at what we get. We get a very, very sharp move to the downside, right? We dropped from 3260 all the way down to 18. So really, really big move to the downside. If we go back and zoom in on what we're currently looking at, again, we have a bullish divergence that I highlighted to you guys. We've been watching it. We've been bouncing off of this trend line, which indicates that we're still building a little bit of relative strength. Okay, so we have a low here, same place we have a low. We have a lower low right here. We have the higher low, and look at how we've bounced and bounced and bounced off of there. Now, what we prefer to see is a move upwards, right? That's really what we want to see. But as long as we continue holding this, there's a chance that we could get some type of a pop. Now, if we break through this, again, most likely we're going to come down and retest our 1031 support level or possibly even as low as 904. But look at our MACD right now. The blue line is about to cross over above the orange line. So step one, we have bullish divergence down here on the RSI. Number two, the thing we're going to be looking at for an entry signal is, can we get above the orange line and start an uptrend on the MACD with that blue line? If it does, that's possibly going to be an entry signal. Here's our last entry signal on the MACD, and you see we had a nice move to the upside. Now, there's three major key levels that you need to pay attention to if we do get a move to the upside. It's going to be the 61.8, 50%, and 38.2 retracement levels. Let's zoom out a little bit and let's look at the trend for the entire year. For the entire year, what we've done is respect our major resistance levels using the fib retracement. So to visualize it, nothing goes in a straight line up, nothing goes in a straight line down. You get a move down, retracement upwards, and then a continuation downwards. That's been our trend in this bearish cycle. Now you can get a reversal when you break through those retracement levels. That's how you can spot a possible reversal. So you see here, we move down, we retrace up to the 61.8 and continue heading lower. And we do this time and time again, right? We're seeing, again, another example right here. We have the move down, we retrace up to the 50% retracement level this time, and then head back down lower, right? And then we move down, we retrace, head back down lower. So keeping that in mind, we have had a sharp move to the downside, right? The relative strength index is oversold, has been oversold, was below 30. We're just barely above 30 right now. That's the technical definition of oversold. Okay. And it would make sense for us to get some type of a bounce, right? We have our trend line here as a possible bounce zone. We have bullish divergence forming. And if we can get this MACD blue line across above, that's going to be a possible entry signal as well. And so there's going to be three main resistance levels that we're tracking from our swing high down to our swing low. That's going to be 1502, 1630, and 1758. Those are your three major retracement levels in an area where I would be very cautious to go long or short, right? Now, the pattern has been that, we've been rejecting these retracement levels, but there's always the possibility that we could come through here and break through them, right? So you don't want to add new money longs at this position because we've had a trend of, rejecting these levels and heading back lower many, many times. You don't necessarily want to go short here either, because what if this is the chance when we actually break through and try to get that reversal where we make a high and then a higher high, because the trend has been nothing but lower highs on the daily time frame. So that's all of the signals that I'm watching for, the key levels. Okay, keep an eye on this trend line here for a descending wedge, our falling wedge. If we break that trend line, then we could end up breaking the pattern, and it could go from a bullish falling wedge into a bearish channel, right? So if we break this trend line and we come down to some of these levels, it could end up looking like this, right? And something like this would be less bullish and not really a bullish falling wedge, but rather just a bearish channel. So keep that in mind. Hopefully you enjoyed this video. If you did, make sure to smash that subscribe button, smash the like button, and stay tuned for more, okay?